I'm Dominic Hobson, co-founder of Future of Finance. My guest today is Chris Richardson, CEO of Percival Software, a supplier of systems to registrars and central securities depositories around the world, which has recently added to its portfolio a trading system. Chris, thanks for joining us.
Thanks, Dominic. Glad to be here. Thanks for the invitation. I have to say, I was expecting a fireside when it said a fireside chat. So in the times of the pandemic, I understand why. But next time I'm turning out with a jumper and a cup of cocoa, okay?
Sorry to disappoint you. We can probably find a digital fireplace to install and
excellent.
Paste it in later. Now, back to business. Historically, Chris, your main products were a CSD platform and a share registration platform. There are obviously links between those two products, but which of them came first and how did it come first?
Oh, golly. Well, we started business in 1986, 1987, and in those days, there weren't such things as CSDs, or there may have been, but they were very, very rare. So we actually went into business, first of all, building share registration systems. And along came the G30 recommendations, the first ones published in 1989. And there in black and white, it said, thou shalt have a CSD with book entry, bookkeeping. And so in those days, the settlement discipline wasn't nearly as complicated as it was today. If you're starting with a fully functional share registration system and you add a little bit of digital magic to it, hey presto, you had a CSD. So that's how it started, essentially. First registry, then I moved into CSDs in 89, 90 was my first customer.
Now, given that history, does a world in which CSDs are more or less universal actually need share registrars? I mean, there are markets, the UK is one, of course, South Africa is another, where you have registrars as well as CSDs. But is there not a logic to the CSD, since it's settling the transactions, to also become the golden source of share registration information as well? In short, do we need share registrars as well as CSDs, or is this just a historical hangover?
Interesting question. Well, the world of CSDs divides into two culturally. There's a direct model and direct holding model and indirect holding model. Essentially, it's a name on register, such as we have in the UK and pretty well everywhere north of the Channel. So all the Scandinavian countries and the Baltic use name on register. And then you've got indirect holding models. So what's commonly used to be referred to as omnibus accounts. And in those cases, the CSD can't be registrar because it hasn't got the detail necessary to fulfill the functions of a registrar. But it's pretty natural, I would say, if you have a beneficial owner CSD account, to also be the registrar. The key to it, of course, is that you've got to offer all the services that a registrar would offer to an issuer. In other words, corporate events being the main block of functionality that you need.
Now, because of your history, because of the point you've just made about the difference between omnibus accounts and beneficial owner name on register systems, you are still working with issuers like Kerry Group in Ireland, like Co-op Bank in Kenya and Ghana, commercial banks. Now they're using your technology to run their shareholder registers. Are you also able to work with third-party registrars? And if you do their demands differ from those issuers you deal with directly?
They're not so different in the sense of, if you focus on the service being offered to the issuer, then no, it's the same corporate action. So actually, for a period in Trinidad, for example, we have the CSD there. We've also got a registrar client, or they used to have a registrar client, and the CSD, of course, used to exchange information with them. So we were the supplier on both sides of it. I mean, the holding of the CSD wasn't represented within the register of the issuer in detail. It was just an omnibus account, CSD nominees, which is legally correct. But they were exchanging information on the details of those accounts who were not in their section of the register, so that they could perform the full corporate action to all the beneficial owners at once. That's the kind of integration that we have to do. It's quite typical, really.
Now, these corporate issuers you're dealing with directly have obviously taken a decision to it's better to run their own register than to give it to a third party. They obviously see advantages in that.
Yeah.
What are those advantages of doing it yourself as opposed to relying on a third party registrar?
It depends on a few things. I suppose it depends on the size of your register. If it's really big, then there are a lot of savings to be made, because outsourcing the service suffers from a couple of problems. One is that the service offered by bureau registrars is a little bit bland. It's a generic service that they offer to all issuers, whereas if you keep it in-house and you're fussy about your registrars, your relationship with your shareholders, your owners, basically, then you can usually get a better deal if you've got the stomach for it. I mean, these days, the fashion with corporate IT policies is to outsource as much as you can. And the register is a typical one that goes out. It's really only in exceptional circumstances. I think even with British Gas following the very famous adverts for SID, they actually ran their own register for a long time before outsourcing it. They really made an effort of doing it, but finally they just gave up. It's not their core business. So and that attitude differs quite significantly as you travel around the globe. So yeah.
Now, I'm making an assumption here, but I assume it was your share registration business which got you into the business of maintaining employee share option schemes as well. Now, how is that just a sort of add-on you've had to supply to some clients, or is it actually quite an important feature of what you do in terms of attracting and retaining the interest of issuers?
It was initially in the very, very early days, because no one had software to do it. I'm talking, many generations of our registry product, years ago, decades ago. We developed it first of all for the UK market, and there are reasons to run those employee share schemes and option schemes, because they were tax incentives. But there's such a large creep of scope and functionality driven by the changes in the law and legislation governing those tax incentives. It's difficult to keep up with. So well, when we made the move to CSD projects, prioritizing them over registry products, which we do, there didn't seem much point in continuing to develop that, because there weren't many people that were, or in-house registrars basically, that were offering that. And we never bothered to include that kind of functionality later on in our more developed CSD generations. So we don't do that anymore. It's not that we don't know how to do it. It's just that opportunities no longer come up.
Right. Back to your CSD business. I think I'm right to say the CSD platform's in place in 19 CSDs around the world.
Yeah.
And those are mainly in emerging markets in Africa, Middle East, Eastern Europe, Central Eastern Europe, and the Caribbean, where you had a lot of success. Now, what do emerging markets require of CSD systems that large developed markets do not?
It's an interesting question. I mean, not all of our implementations are in emerging markets. The three in the Baltic, those Baltic countries are actually run from a single instance, single version of the platform. They're all run from one database, one set of business functionality, and they have a really complex business model. So, we do for medium and larger markets as well. And to be quite honest, the difference, they're mostly nothing, I would have to say. They require the same things, but there are some fairly crucial differences. So the ones that are in the EU, that's four of the countries that are in the EU. So the three Baltic countries and Malta as well. They've got to deal with T2S in integration with the centralized settlement system of ECB, and all the other EU regulations that impinge on their business. So CSDR is the obvious one, and then the GDPR as well, general data protection regulations as well. So that's different. The smaller countries also have data protection acts and laws that they have to follow, but they're not so aggressively implemented as they are in the EU. And the other thing that we see quite a lot of, in my opinion, unfortunately, in the emerging markets is an over-reliance on pre-validation as a risk mitigation method. So as soon as the order, in some cases, goes into the trading platform, you're expected to earmark the securities on the seller's side, only on the seller's side. So it's quite an unfair method of risk mitigation because it affects the seller only. It's a little bit archaic. I mean, the international assessment agencies that give your market a rating don't like that at all, because it means that you've got assets committed for the entire duration between trade and settlement. Not good. So that's the main difference, the pre-validation in the smaller emerging markets.
I'd like to ask you a bit more about the functionality of the platform. Before I do, can I ask you why, is there a reason why you don't have clients in Asia?
Dominic, that's a really good question. Maybe you can hypothesize as well as I can. I don't know. I honestly don't know. It's not for the want of trying. You know, up until the pandemic struck, we were going around all the trade shows and so on and trying to elicit some kind of interest. But apart from, you know, mild interest that eventually petered out, we never seemed to get a foothold. I mean, it's best to identify what's any kind of commonality about the existing set of customers that I have in the countries where I've been. The only thing that I can see is that many of them were ex-British colonies or part of the British Commonwealth. It seems silly, but I mean, language has a great deal to do with it. Also, British Companies Act Cap 48, that still holds sway over many of the things we do on the share register. Right. And as such, you know, those registry services that beneficial owner CSDs have to provide. So maybe it was just a better match for those countries. I don't know. But from what I could see in having to respond to RFP questions and so on, there shouldn't be any technical reason why I shouldn't have been able to make inroads into Asia. It hasn't happened yet. We are trying.
Okay. Now, when I asked you about what's the difference between emerging and developed markets, you've explained not much, but I sort of expected you to say, well, actually, emerging markets want full functionality. And one of the things your platform does have is a very full set of functions. You know, it does the settlement, does the registration, does corporate actions, proxy voting, even does securities financing, collateral management. Now, if you're a buyer of this system, do you have to buy the whole lot, or can you buy the bits you want and plug it together with other applications you might have? So how much of the system do buyers have to buy, and how much, you know, can they choose for themselves?
It is modular, so they can buy the bits that they actually want. And a lot of them go just for a full license. We try not to tip the scales too much in favor of having to purchase every little individual module. So we give a general bundle price for everything. It's actually more economic to purchase it that way, and that's not the real issue. I mean, the integration tends to be a large part of any kind of new delivery project as well. Integration, customization, not so much these days, as we've got so much in the package. It's quite easy to adapt. But yeah, and you know, start lending and borrowing. You mentioned that list as well. I believe it's. Yeah, well, that's in the G30 recommendations, but not many people actually come around to implementing it. It's got a huge conflict with pre-validation, which I mentioned earlier was used everywhere as a risk mitigation method. But by and large, they take everything and use only a part of it, Dominic.
Now, taking everything does at least get you over or around the problem of having to integrate it with alternative or existing systems. So yeah. If I said to you, how difficult is it to implement the Percival CSD platform, would you say it's terribly simple if you buy the whole thing, but there are some complexities if you buy bits? Or is it easy, whatever you do?
The complex bits are always to do with integration, not so much about customization. But one of the things that we're very careful about at Percival is that we're really reluctant to implement business logic in our solution. You know, that sounds odd because CSD is all about business logic, but actually, if you start to look at it closely, You can build things in the form of a framework which can be easily configured online at runtime. So you can configure things, on the fly. And we've developed our functionality that way so that when we come to a new delivery project, it's mostly a configuration effort. And well, depending on whether they've got a lot of messaging integration with external systems, if they do, that tends to be the largest part of the work that we have to do, and that's different every single time. You can't really standardize on that. But generally, it's quite easy from a technical perspective. And we've also designed the product from the ground up to aid our support and diagnostics when we come to helping the customer. So a lot of audit trail and detail logs of what's going on. So if we're trying to trace a problem, it's easy to narrow in and find and fix something really, really quickly.
As you look across all the implementations you've done in these different markets, whether or not they have the English language in common, is there a single lesson that you have distilled from that experience, which you would say to any CSD looking to install or replace a system? What is the one really important lesson that you would share with them to say this is what you really need to focus on?
Ah, dear. Well, let's see. How blunt can I be? We've learned to ignore the customer in respect of architectural demands because we know more about it than any customer is likely to. But listen to the customer in respect of requirements, because that's what matters most to them. I've had a couple of disasters in a 35-year-long career in this business, and they've both been related to accepting, I suppose, very severe restrictions on architecture that has been placed on us in terms of the project and how the product should be migrated or ported or constructed. It doesn't end well, and I will not do that again.
Right. Mm-hmm.
But that's advice for other people who are building CSDs. Not sure what I would say to the customer. I mean, let go of your architecture, look at the business and what it is that you actually want to do, then go looking for a system.
Now, I mentioned a minute ago that your platform has very full functionality. Now, this year you've moved into the trading side as well. You've created a trading platform. You've just implemented that system in Barbados. What explains your decision to add trading? It obviously isn't my answer that these markets need everything. There must be some other factor. So why have you decided to add trading to your repertoire?
Wasn't sudden. I've wanted for the last 20 years to do it, and it's only recently that things had settled down internally at Percival, and we had enough spare resources to devote some attention to it. I mean, there have been changes throughout the years as well. Let's say 10, 15 years ago, you got I suppose an RFP come up, a procurement project in an emerging market. They're looking for a new trading system and CSD, because these things tend to be in silo arrangements in emerging markets more than anything else. And guess what? They've also got a single vendor policy, or at least they're definitely looking for a single prime contractor. And what happens is that as a CSD vendor, CSD specialist, we've then got to partner with another vendor who is a trading system specialist. Now, look around the world and try and find a trading system vendor that produces a reasonably good system who doesn't have a CSD or is in the process of developing a CSD. Not so easy anymore. So it's becoming more difficult to compete internationally in that space effectively, unless you've also got an offering in that area. So we developed it. It was an interesting project. It's a very interesting rabbit hole to go down if you've not been down it before. So yeah. The other thing, of course, is that if we've got our foot on both sides of the integration path, so both the trading system and the CSD, we have closer control over integration. That said, I mean, we don't make assumptions about what vendor is going to be on the other side of either product, but our two products come already integrated. That's also a huge sort of cost center, the area of cost that you would otherwise have to consider if you're buying from two different vendors. Integration, it's an issue.
Yeah. As you pointed out, in emerging markets, the CSD tends to be owned or controlled by the exchange, and so that makes the implementation easier. Now, what about regional exchange groupings? I know you work with one in West Africa, and there have been a number of projects in other parts of the world to do something similar, and the economics always seem to argue in favor, but it seems that national rivalries often overcome the promise of additional capital flows and greater liquidity. To what extent can pure technology, this platform which runs from trading through to custody and settlement, actually overcome? Can it create enough savings to overcome the political rivalries between different countries who regard the stock exchange as a national virility symbol, if you like?
Oh God, no good news for you there, Dominic, I'm afraid. I think it can do little to overcome them. And the issue, I mean, it comes down to flow of capital over borders at the end of it, because there's no technological bar to creating a regional market. Even if you're not installing the same CSD solution or same trading solution in all the markets together, it should still be possible to settle cross-border trades. I'm sure you would think. But in many of these places, you've got such rigid exchange control that it makes the whole prospect of a cross-border trade close to impossible. It's really, really difficult, and it's something that we're passionate about. I personally am passionate about. I don't know if you're aware. I was actually born in Barbados. I was fed a diet of the wonders of the failed Federation of the West Indies that we attempted in the 50s, and I would like to see something like that again for a market. Technology is there; it's available. We tried to actually architect our trading platform to allow it to happen. So our trading platform is multi-venue. So it would allow, for example, from a single platform, multiple exchanges to be run within a region. For each exchange to start off having its own unique national identity with its own trading and market rules, and develop step by step in parallel a regional exchange. Gradually, transfer liquidity as you manage to sort out the problems with cross-border trading on a step-by-step basis. Maybe it will be easier that way, but it's something we intend to push quite vigorously at Percival.
So what went right in West Africa to make it work?
A single currency union. Mm-hmm. That's the thing. I think there are two currency unions in West Africa and Central Africa. There's a Central African one as well. They're both francophone groupings, I believe. But that's the thing. Is I come back to that. It's the thing that stops it is the flow of funds across border. If you have a single currency, that takes most of the sting out of it. But it can't be seen as a starting point for establishing a regional market. Wow. In most cases, that's not an option. So you've got to start with something a little bit more, more practical to develop and have sensible procedures for being able to trade cross-border.
Well, maybe central bank digital currencies can help a bit with that, simply by making changing between currencies a little bit cheaper than it is.
It's not the cost. It's the politics. But you're not allowed to transfer the money outside of the country unless you go through several hurdles that are imposed in the regime. You can't do it. I know, because you invoice one of these countries for support or whatever it is. It can sometimes take ages. They passed the invoice ages ago. Yeah, it might be T plus 60 at the end when the trade gets settled. So no, it's not the cost. It's not a cost issue at all. It's a regulation
exchange
issue.
Controls, is the problem?
Yes.
Right.
Yep.
Okay. Now, something else, the ISO 20082 standard, CSDs around the world have in theory been very early adopters of ISO 20082. In practice, of course, they've added local nuances, and there are many versions of ISO 20082 around. But I was thinking, from your point of view, a particular problem is the securities industry, the gatekeepers into CSDs, who have been pretty clear they're not terribly enthusiastic about switching from ISO 15082 to ISO 20082. What would you say to those custodian banks, effectively, when they say, well, we see no business case to make the change to ISO 20022. What's your argument to them if you have one?
Okay, well, let me focus on the CSD perspective, because you need to separate the CSDs from the participants who use their services. Huh? I think CSDs mostly are and should be neutral. They're probably a little bit more cost sensitive. In other words, if they're going to provide a ISO 20022 service offering to their participants, they have to implement the infrastructure and pay for it at the start. But in turn, if their participants are telling them, we are not interested in interacting with you in 2022, what are they going to do about it? Then it becomes an issue of pushing them. I mean, we went live in Estonia in end of 2010. Actually, the New Year's Eve going into the 1st of January, and they were joining the euro at the same time. And it was a little bit disingenuous of them, but they used that as an argument to the participants to say, you have to change it. It's part of the euro change. We can't avoid it. So the local participants, who were primarily the local banks, were under considerable pressure to implement the changes internally in their own system by that time. So it was a lever to push things along. Other environments are not so lucky, or may approach it in a different way. The sluggishness really is with the participants to take it up. They've got huge, complex banking systems, typically custodian systems that are integrated with the CSD already. And to consider a project to swap over to 2022, irrespective of how many more benefits it gives them, it's hard to get them moving, Dominic. I've seen it. It's not the CSD's fault. It's really trying to get the participants moving.
Mm-hmm. The CSDs are in quite a powerful position to force them to change, as you've just described in the Estonian case, albeit under cover of the euro, but joining the euro. But they could say to those domestic users in particular, well, this is the right thing to do, and if you want to do business with us, you'll have to switch. They're not in a position to do that because of their ownership structures, or what?
No, they're subject to regulation as well, as are the local banks. And the banks would just go to the regulator and complain, saying this is unfair, and it gets pushed back. There's a lot of internal politics that sits behind this, Dominic. It's hard to judge, and as a vendor, a solution vendor, we're not exposed to the full flavor of it. You only hear people will mention, oh, we had a discussion with the regulator and this was the outcome, and you start to feel in the background these shadowy interest groups moving in towards their own individual corporate goals and objectives, and they conflict. So it'll vary from one situation to the other, but I don't think most CSDs don't have the luxury of saying, this is how it's going to be. Suck it up, buttercup. Most of them don't. Would be nice, though.
Talking of regulators, we've talked about ownership, we've talked about currency, we've talked about local politics as drivers, I suppose, of the functionality you're adding to your platform all the time. But how much of your functionality that you develop is actually ultimately driven by regulation? And I mean regulation at the local level. You have to adapt the system to local nuances in regulation. It'd be great if there was a global regulation in this area, but there isn't. So you must always having to be adapt to what the local regulatory conditions are. I mean, I may be wrong about that, but how much of what you have to do is actually driven by regulation at the local level?
Interesting. I think there's one recent project that we did which sticks in my mind, which is National Depository Ukraine. Ukraine had a lot of very specific processes for doing their business that was enshrined in law, which is part of the issue. You can't. It takes an act of parliament to change it. So not a smart thing to do, but it's done like that in many cases. And it involved creating specific business flows and processes to deal with that. Generally, as well, we need to separate functionality from integration work. So the functionality, which talks about the structure of the CSD business, the nature of it, what it is that you need to do as a CSD. Well, we take transactions which moves shares from one account to another and moves money from one participant to another. And yes, of course, the devil is in the details, but essentially this is what we do. We need to maintain and be able to extract a list of balances in a particular asset class, a particular asset at one particular point in time, and carry out some manipulations on that. And we're going to call those corporate actions. And by the way, there's 68 different variations. That's pretty well the same the world over in terms of the structure and how it's done within the system. But integrating now with the local participants who are sending in instructions and do different things as actors on that stage, that can differ significantly from one locality to the next. And it's the largest part of any kind of complex integration or delivery project that we have to do. The actual integration work, not the functionality, but interpreting the messages in the language that they choose to speak, whether it happens to be 15.022 or 20.022 or some other proprietary language that they're talking, into actual parameters for the function calls that already exist and the functionality that already exists in our product. It's integration that is driven by that. I mean, look at T2S. That's a little bit of a locality, although the locality is the entire Eurozone. So I think there were 130 different messages. That was a lot of work getting all that prepared and working. But then there are updates coming out every 6 months. And that keeps us busy as well. Is that regulation? No, I suppose it's more standards than regulation. There's a constant driver. Standards change. SWIFT changes their 20.022 standard. I think even 15.022 changes from time to time still. But yeah, that's more of a driver than functionalities. Literally functionality is not changing that much.
Yeah, I was just wondering whether it's called T2S regulation myself, but it's a huge infrastructural change, really, isn't it? But there is a regulatory component to it in the sense that the CSDR, this regulation looming very large in Europe, which you mentioned a minute or so ago, and it introduces this settlement discipline regime on top of the uniform, T+2 settlement timetable. As far as I can judge, CSD is going to be directly involved in the implementation of the settlement discipline regime in the shape of helping with the financial penalties, but they don't seem terribly keen to get involved in supporting users with avoiding buy-ins by developing stock loan services or whatever. You're active within the Eurozone. What are you doing to help clients prepare for the settlement discipline regime, which I think starts in February next year, February 2022, doesn't it?
Yeah, it was announced suddenly, and we had to prepare functionality, a separate module for participants to report settlement fines, basically. But quite honestly, the idea of buy-ins was already in the G30 recommendations in 1989. Has been in every single G30 recommendation publication since then. It's not new. And I can tell you why CSDs don't like it. It's like, that's not our business. To do a buy-in, you have got to go to the market. Because a buy-in is supposed to take place at a market price. It can't be an OTC. So you have to buy in at whatever the current market price is. You can't do that privately for it to be fair. It has to go to the market, in which case, it's something that exchanges have to deal with. And then who's going to be the actor? There are questions that are not clearly answered in the regulation. They just said, oh, go away and implement buy-ins. But there are a lot of different parties that have got to work together to implement some kind of business process that could be automated. From the solution side, it's easy enough for us to do, generate the instructions. Who are we going to send them to? That's politics, local politics, and vested interests that have to work together and decide, as a market, how are we going to do this? Those guys, for things like this, don't often play so well together. Sadly, it's not a technology problem, at least not with our solution, and I don't think it is with any other vendor solution either. That's not where the problem is.
Can I take you back now into history, into the origins of the firm? As you mentioned, you started in 1986, before CSDs before the G30 recommendations made CSDs a national priority around the world, and before most of them got built in the 1990s. But there was in London a project going on at the time to replace the London Stock Exchange's settlement system. It was called Taurus. And I remember it very vividly because it consumed a great deal of money and ultimately failed. Now, I think you had some involvement in that project, or at least were helping clients to prepare for it. Can you share with us your own memories of that project, which I think ran from late 80s to early 90s?
Yeah, I remember it quite well because it was before we had actually gotten into the CSD business, or just on the cusp getting into the CSD business. And most of our customers up until that point, clearly all of our customers up until that point were registrars. Registrars were singled out for special vilification by the powers that be during the time as being the reason that Taurus failed. Well, maybe, but and that's probably because Taurus, the people who were developing Taurus, didn't really listen to what the registrars were telling them in terms of the record keeping that had to be carried out, and the complete full process that had to be followed for the whole thing to be legal. Anyway, there were some good things that came out of it. We brought out a new version of our registry product as it was at the time. And the main changes actually were the implementation of basically an ISIN code as an identification number for a particular instrument, and the implementation of CLSP standards for record keeping of names. The CL Committee of London and Scottish Bankers, I believe it was. So they specified how a name should be recorded, and the different attributes that you would record for an individual. And they even made it into the CREST functionality. So it brought about a lot of good changes in solutions, in our solution certainly, and I would imagine in the solutions of other vendors who were against whom I was competing at the time, and just improving their record keeping. So it did have an effect. It failed as a system in and of itself, but it did have a positive effect on solutions generally, and standardization of the way those things, different entities, business entities, were treated.
Well, it did leave the UK without an issuer CSD and plenty of registrars, didn't it? Exactly the problem we were talking about the issue we were talking about at the beginning. Now, something else that happened around that time, late 80s, early 90s, as the G30 recommendations start to kick in and CSDs start to get built in all markets. You started working with partners in Estonia in the early 1990s. You're obviously still there. I think I'm talking to you in Estonia now.
Yes, so, you are.
What's the story of that, behind that relationship? It's obviously working well because you've been at it a long time, but nearly.
Yeah, but there are different reasons. I mean, I moved my business here. Basically, the entire Percival team sits and operates in Tallinn because the technical skills of the workforce here are beyond compare. Those guys are really good at technology. I mean, Estonia kind of almost fell into my lap, really. Just lucky happenstance. We had just done the implementation for the Malta CSD, and I think the consultant who was involved in that found this opportunity in Estonia. He said, Estonia's, called me up and said, Estonia's looking for a CSD. By the way, I haven't met you, but I was the management consultant on the job where you were selected for Malta. Pleased to meet you. And off we went. It was April '94. Arrived in Tallinn. It was a very grim place. There were heaps of snow. The place was cold. It looked horrible. Oh, bloody hell! I don't think I want to work here. But a long story, very, very short indeed. We won the project, and when we came back in the summer to implement, the place had changed. they were having rock festivals. It was sweltering heat. It was beautiful. And they'd done so many renovations on the old town since my visit in April. It was incredible, wonderful place to be. Got on really well with the people. The language eluded me for a few more years yet before I learned it.
Mhm.
But it was a really interesting location to work with, and it was effectively a greenfield site. So there was nothing here. We implemented it from the ground up. In those days, the technology we were using was COBOL.
Right. Okay.
It was a while. It was some time ago.
Mhm.
I was young then, Dominic.
Yeah, we all were, I think. Even I was young then. It's that long ago. But you mentioned that obviously one reason to go to Estonia was the talented developers.
Yeah.
Now, there's no shortage of demand for talented developers around the world these days. How do you keep your developers engaged with your business?
Oh, golly. It's a good question. I mean, finding, motivating, and retaining anyone who is creative is difficult. We get people invested in the product. I'm not looking for someone who is interested in an episode on their CV. I'm looking for someone who is willing to commit to a product and invest emotionally in it, so that, this is mine. I helped build that, and we're proud of it. So the firm actually internally is like a little family. My main business partners are, employees of Percival. Actually, all of my business partners are employees of Percival. We've been together for, 20 years already. So growth is slow. Trying to get a new person that fits in with our internal company culture. You don't find those guys so often. And the guys coming out at university, mostly they're not ready to take on something like a complex product like our CSD platform or trading system. It takes a little bit of a maturity. We're families here, in a sense that they're all fathers or mothers, so there's that bit of maturity about them as well.
Mm-hmm.
It's difficult to explain. We haven't been searching for a while, but we've hired someone recently. He works on the website. He's done quite a lot of work on the development of the trading system. We keep our eyes open. We listen for rumors, friends of friends who might know someone. We interview them if we feel there's going to be a click, and then we take them on really, really rapidly. And interestingly, quite a few people joined us from the NASDAQ CSD, but I think they got a little bit fed up with that and changed their employment contract. So we don't see many of them anymore.
Okay, can I ask you about
I think they thought they were using us I think they thought we were using them as a university, which, well, it was a fair assessment, I suppose, at the time.
Yeah. Can I ask you about NASDAQ? Because you're working with the exchanges in all the Baltic states, I think, and in Iceland, not just in Estonia, and they're all owned by NASDAQ, which is itself a vendor of CSD and exchange technologies. How well does that relationship work? Is it difficult or?
Oh, well, Dominic, what should I say? There's a limit to what I can say. We're talking about one of our customers after all. But any large organization, like, NASDAQ are not unique in this way. They're not homogenous. They're not unified. So NASDAQ appears two different persona to us. So one is the customer, with whom we get on really well. They love our support. They love our product. No problem. But the NASDAQ that's a competitor, of course, we don't have such a great relationship with them as you would expect. We're fighting to win the same contracts internationally. It's complex. Now,
you mentioned a minute ago that when you first wrote a CSD system, it was written in COBOL.
Yeah.
You're now particular about making sure your systems can work with .NET. Now, I don't know whether this question makes sense to you or not, but is working with .NET a future-proofing strategy, or does it tie you to a particular vendor in a way which makes it difficult to future-proof what you're doing?
Sorry, it's an amusing question. I'm sorry, Dominic.
Meant to be an amusing question. Don't worry, you're perfectly welcome to laugh, but I'd like an answer as well. Yeah.
Of course, of course. It's not just that our system's going to work with .NET. We develop in C#. .NET is our development platform. So here's the difference. There are two major platforms that are used. So it's either Java or it's .NET. People do program in C, C++ and things like that. But essentially, if you're going to use some kind of unified platform, it's going to be the main two religions are Java and .NET. And their differences are that Java is a single language and multiple platforms. .NET are multiple languages, but a single platform, which is Windows based. That said, Windows, Microsoft as a supplier, take care of all the underlying libraries, everything. And they're responsible for future-proofing their own product because they have a huge international user base, millions. And it's all going to be the same. And you know that if something is going to go obsolete, Microsoft are going to tell you about it, and it's still going to be there the next couple of generations till they finally turn it off. You can see the strategy it's going. By comparison, Java, there are no libraries that come with Java. They are open source libraries that you can download, and many different versions of those, and have a lot of problems involved with compatibility between those libraries and keeping your product future-proof. So if you're going to choose a development platform that insulates you against the future, Microsoft is a damn good choice. So yeah, we don't have any worries about future-proofing it at all.
Yeah. Can I ask you about the cloud then? You talk as if these are all local implementations. Does moving to a sort of cloud-based software as a service model make sense for your business and for your clients, or not?
Well, the Caribbean implementations all run theirs on a cloud. I don't know what NASDAQ does. We're not privy to that information. We don't get to see their infrastructure. They have their infosec prohibits it. Our solutions as such don't care. You can implement them in the cloud or locally or a hybrid of the two. So if you want to implement them in the cloud, our architects and designers will have a discussion with the customer's IT team and work out. We give them advice to the best of our knowledge to help them implement whatever kind of infrastructure they want, be that cloud-based or local. So we don't get into the reasons for why one or the other. There's some things we can point them to and say, well, these are the things you should be thinking about in terms of scaling or fault-tolerant architectures or infrastructures, things of that nature. We help them from that perspective. But the location, the culture of their infrastructure, we try not to get into. We try and support both ways of doing things. Don't push them one way or the other.
Now, some of your clients, including Barbados, but also Jamaica, they're interested in trading cryptocurrencies and possibly other digital assets as well. They're working, I believe, with BlockStation in Toronto, which is a blockchain specialist supplier of trading, custody, settlement technologies. What's the impact of these new asset classes, by which I mean cryptocurrencies and security tokens possibly? What's the impact of those on your competitive position, the competitive position of Percival?
Neutral to positive, I would say, in the sense that for us it's integration. So we integrate with the platform. We're currently looking at a couple of proposals from that region currently for integration with BlockStation. There was some, I think BlockStation have got some kind of smart app that the users can use to trade on their platform, and they're looking at trying to integrate it with either the CSD or our trading platform or both, and we're certainly up for it, that's for sure. So yeah, we are looking at that, and we've also got we're also working with a customer in Europe, in the Eurozone, who are also developing a crypto exchange with multiple different cryptocurrencies that are used for settlement, as well as digitized assets. But I can't tell you any more, Dominic, at the moment. That's under
You are
NDA.
looking to adapt your own platforms to
Yes.
a crypto opportunity, as it were.
Yeah, absolutely.
Now, Bahamas is
Yeah.
interesting there. It's in blockchain-based assets, but the
Yeah,
central bank's also issued a CBDC there, this
yeah,
sand
the
dollar.
sand dollar. Yeah, that was really, really interesting. So I think things move quite slowly in the Caribbean, Dominic, I'm afraid. So at the moment, yes, of course, we're having a chat with them and discussing the possibility of integrating the CSD platform directly with for settlement using the sand dollar.
Mhm.
One of the issues that I see generally with problems I see generally with integrating a settlement system with a digital currency is the fact that any such integration must use, as far as I'm aware, it must use Model 1, BIS Model 1 settlement. So it's trade by trade settlement. Each trade is considered individual and must settle individually, separately from all the others.
Mhm.
Okay, so what, you might say? Well, the problem is that that's not a particularly efficient way of settling because it requires higher liquidity. You can't offset your purchases against your sales, for example. So we don't care as far as the solution is concerned, but it does cause issues in terms of local efficiencies. So
Mhm.
at the moment, they settle in batches, as most CSDs do. But they would have to change to trade by trade, and we haven't had that final discussion yet. But it's just another issue to discuss with them before we implement it. The good thing about the cryptocurrencies is that they have a public interface. It's really easy to integrate with them. Security concerns about the setting up and the maintenance of keys, of course, that's the weak point, not of the cryptocurrency itself, but in how that's implemented in the system that's trying to integrate with it. So we need to be fairly careful about that. But other than that, it's an opportunity for us.
Well, I definitely wouldn't say so. What that atomic settlement approach does create the problem you've described, the liquidity and netting problems, yes.
Yeah.
But I'm right to conclude from what you're saying that the technologies you've developed over the years for issuance, for registration, and settlement, and indeed now trading, these are both adaptable to digital assets and being adapted to digital assets where clients are showing interest. Is that right?
Yes. I mean, at the back end is just integration. So our trading platform, it doesn't care what CSD or payment system you want to integrate with. It's just, different instructions get squirted out the back, and they're talking to different systems, and the language they're using might be a little bit different, but the business is still the same. I've done a trade on this platform, and now I want to settle. So I need to send instructions. Do I send it to a classical CSD? Do I send it to some kind of other kind of crypto CSD? It's that's a typical Tuesday for us.
Okay. Well, so I can ask this question. This is my last question. In fact, I'll ask in a slightly different way, and you've hinted at that in what you've just said. Is that let's imagine that securities markets do develop this tokenized component in addition to cryptocurrencies, and then you've also got the world we live in now, the securities markets, traditional securities markets, if you like, and these two are going to, however this thing unfolds, these two are going to live alongside each other for quite a long time. They may even live alongside each other forever. So there's going to be at least a period of coexistence, a long transition. You're going to have lots of different instruments, some of them in the digital form they are today, some in the blockchain form of the future, some fiat currencies, some cryptocurrencies, some CBDCs, and you're going to have these crypto exchanges as well as stock exchanges, and you're going to have blockchain-based technologies and your C#-based technologies. Now, this transition, this period of coexistence, as it could go on for a very long time. Is that good news for Percival, or is that bad news, or is it just another difficult Tuesday at the office? I mean, is this an opportunity or a threat for you?
I certainly don't regard it as a threat. We've been, it's clearly an opportunity. So integration with a DLT, distributed ledger technology backbone, is really easily possible for the trading platform. Integration with a DLT settlement service is easily possible for our CSD. and addition of some kind of DLT externalization for both our trading platform and our CSD. We're currently investigating it for our own product. So at least it can present to the world as with DLT technology. But sadly, I talked to a prospect or a customer, and they said, "Oh, are you doing blockchain?" I said, "Maybe." I said, "We want to implement blockchain." And I said, "Okay, well, what problems have you got that you think blockchain is the answer to? What problem do you currently have that your infrastructure can't provide, that that you're trying to solve, that you think blockchain is the answer for?" And then there's almost universal silence. Best answer I had was from a customer recently. He said, "Oh, okay, well, we have a use case. We're supposed to integrate with some kind of European custodian in respect of IPOs, and they're using blockchain and smart contracts as a method of issuing out the prospectuses and running the IPO. Could we do that?" Sure, no problem. Any specific use cases, of course, it's an opportunity for us to do work and get paid. A lot of work in this area around at the moment. So yeah, it's definitely an opportunity. We don't intend to go anywhere, Dominic. Our solutions are world class, and they're going to be incorporating the new technology as soon as we get good use cases and customers that sign on the dotted line, and off we go. We're working internally on those features as well, but currently no actual takers amongst our existing customers. We are pushing. We do push, but you can cajole and encourage and so on, but in the end, it's got to have a business case. You'd be talking about emerging markets who have limited resources. They're not got bottomless pockets. So they talk about blockchain, and then they say, okay, it's going to cost us this much. But we'll hang on for a little bit and see how things go. Sad truth.
Chris Richardson, thank you very much.